All right, let's dive into Salesforce. The stock has basically been in the doghouse all year, a massive underperformer. So you can bet that all eyes were on this latest earnings report, with investors just desperate for any sign of a real turnaround. Well, it looks like they might have just gotten it. So what happened? The stock popped almost 4% right after the numbers dropped. Now, I know, that doesn't sound like a world beater, but you have to remember this stock was down nearly 26% for the year. So for beaten down shareholders, this was a huge sigh of relief. The big question, though, is this just a temporary bounce, or is this the real deal? To figure that out, here's how we're going to break it down. We'll start with the hard numbers, then get into management's big story they're telling about the agentic enterprise. After that, we'll look at their guidance, see how the market reacted, then give you our official rating on the stock, and we'll wrap it up with a trade idea you might find interesting. Okay, first things first. Let's dig into the numbers for the quarter. This is where the rubber meets the road. We get to see if they're actually walking the walk. And on the bottom line, wow, they absolutely delivered. Non-GAAP earnings per share came in at $3.25. Wall Street was only expecting $2.86. That's a massive beat, almost 14% higher than expected. A super strong sign of their profitability and just great cost control. Now, how about the top line? Revenue was solid. It landed right at $10.26 billion, which was pretty much exactly what everyone was looking for. That works out to 9% growth over last year, and for a company this huge, that is a very respectable number. But when you look under the hood, the business looks even healthier. Their operating margin is a seriously impressive 35.5%, and they're growing free cash flow by 22%. But the number that pros really focus on is CRPO. Just think of it as their pipeline of future business that's already locked in. And seeing that grow by a solid 11%, well, that's a really healthy signal. But honestly, all of that, it kind of pales in comparison to this slide right here. This was the headline. The real story, the one everyone was waiting for, was seeing real money from AI. And here it is. Agentforce, their main AI product suite, saw its recurring revenue explode by 330%, hitting $540 million. This is the proof. This is what investors needed to see to believe Salesforce can turn all that AI hype into actual, cold, hard cash. So you see this explosive AI growth, and you have to ask, how does it fit into the bigger picture? Well, management isn't just selling a product here. They're selling a whole new vision for their customers, something they're calling the agentic enterprise. And you heard it straight from CEO Marc Benioff on the call. He kept hammering this point home. What he's saying is, look, these early AI wins aren't just one-off sales. He sees them as the very foundation of a huge multi-year pipeline as every company out there starts to rebuild themselves around AI. So you're probably wondering, what on earth is an agentic enterprise? Well, Salesforce boils it down to a pretty simple 3-step recipe. First, you take all your company's messy, scattered data and you pull it into one unified place. Second, you unleash these AI agents that can actually understand and do things with that data. And the final step, you use those agents to completely reinvent and automate how your business actually works. And if you think this is all just some fancy marketing slideshow, get this. The platform has already processed 3.2 trillion with a T tokens. You can just think of tokens as the basic building blocks of AI language. A number that huge tells you one thing. This is not a theory. Customers are using these tools right now and at an absolutely incredible scale. This brings us to a really crucial debate that came up in the Q&A. Why wouldn't a company just try to build all this AI stuff themselves? Well, management's argument was pretty clear. A lot of companies have tried, and they're finding out that building this stuff from scratch is an absolute nightmare. It's too complex, it's way too slow, and it's incredibly risky. And that frustration is basically driving them right into the arms of Salesforce's ready-to-go platform. Okay, so with all this great momentum, it's no surprise it was reflected in the company's outlook. So let's check out their guidance and how the market took the news. And yep, here's the proof in the pudding. Management felt confident enough to raise their forecast for the entire year for both revenue and earnings. That is one of the strongest signals a company can send. They're telling investors, we think this great performance is going to continue. And they're saying that even as they're busy absorbing their new acquisition, Informatica. Which, brings us right back to the question we asked at the very beginning. After such a terrible year for the stock, was this the quarter? Was this strong performance and confident outlook the definitive signal that a real turnaround for Salesforce has finally begun? Well, we're not going to dodge the question. It's time to put our stake in the ground. Here's our official take on the stock as we look ahead to the next quarter. Before we give the rating, you have to weigh both sides. The bull case is pretty obvious that AI growth is on fire, they're gushing free cash flow, and they raised guidance. That's a powerful combo. But let's be real, the bear case is still there. The stock has performed terribly this year for a reason. The economy in Asia is still pretty soft, and some of their older businesses, like the marketing and commerce clouds, are still weak. So it's not all clear skies ahead. But after weighing all of that, our official call is outperform, with a price target of $325. For us, it really just comes down to one thing. The AI monetization is finally real. It's a game changer. The story they've been telling for over a year is now backed up by hard numbers. And while there are still risks, that combination of great execution and a massive AI growth runway makes the stock look really compelling from here. All right, let's wrap this up. For anyone looking for a more actionable idea based on all this, we've got one. It's a little outside the box, but it's built on a really interesting market dynamic we saw play out. So first, you got to understand a concept called implied volatility. Sounds complicated, but it's not. It's basically just the market's guess for how much a stock is going to swing up or down. And heading into this earnings report, options traders were betting on a huge move for Salesforce. They were pricing in a swing of about 7%. But here's what actually happened. The market was braced for this massive 7% earthquake. What they got instead was a tremor of just 3.7%. The actual move was barely half of what the market was scared of. The fear was way bigger than the reality. So the trade idea is to sell that fear. The thesis is pretty simple. Salesforce is growing up. It's becoming this predictable, highly profitable cash flow machine. Not a crazy, volatile growth stock, but the options market hasn't totally caught up. It's still pricing in these huge, dramatic swings. So this creates a potential opportunity to sell that expensive insurance, betting that future moves are also going to be calmer than the market thinks. So there you have it. This quarter really felt like a show-me moment for Salesforce, and they absolutely delivered. The focus now is all on whether they can sustain this AI momentum and prove that this really is the start of a whole new chapter of growth. And of course, as always, remember, this is not financial advice.